So the reason why we're discussing this, remember, every time we are discussing of audit procedures, audit procedures on subsequent events, we've already done this. Audit procedures on going concern, we did audit procedures on group, audit procedures the other day on related parties. The last point is always seek management representation letter. Seek management representation letter to confirm either on presentation and disclosure. Confirm on presentation and disclosure. It will vary depending on which assertion you wish to confirm, but the one captured under ISA 580 is always confirming on assertions of presentation and disclosure. So we need to get right again what it is, who drafts it, and so on. But before we even discuss about it, I want to take you back to ISA 500. We discussed this audit evidence. We discussed this audit evidence. And when we are gathering evidence, we have three classifications of evidences. Number one, we have immaterial. Yes, immaterial evidence, which as auditors, we can rely on oral presentations made by the management, because this evidence is not material. It's not significant. What they say is okay. Their word of mouth is sufficient, is okay. But again, we have what we call material evidence. And in this case, auditors can perform substantive tests. Substantive tests together. Number three, we have material evidence. Material evidence whose knowledge is vested with management. Get this right. Immaterial evidence or evidence is enough. Material evidence where we can do some observation, inspection, inquiry, third-party confirmation, recalculation, the performance, analytical review procedures. We can do all those. We can perform all those substantive tests together. It's a material, but we have a way out as auditors. Now, this one is the one which has got issues because it's so material, but its knowledge is only vested with the management. And it is this one that we require the management representation letter. It's this one that we require management representation letter. Because it's the one, it's this that management avails us this evidence, which is only vested with them. Ourselves, we can't be able to gather it. The knowledge of that, the knowledge pertaining to those assertions is vested with the management. It's only the management who can avail this evidence to us. They do so through a representation letter. So you can say that this letter is a letter written by the management. Written by the management to the auditor, availing that evidence which is only vested with the management, is vested with the management. It's vested with the management. That's why we require this letter. It's like, although we'll discuss this in the next topic. Topic number 6, the first sub-item is ISA 810, PFI. PFI, I can't wait to discuss PFI because this time around we must answer a question of around 8 marks on PFI. If I find you having prepared a projected cash flow statement, Yes, IAS number 7. IAS number 7, cash flow statement. Cash flow statement. Now, I find that you have prepared a projected cash flow statement running from 1st April 2024 up to that 1st March 2025. I can't know the intended use of this projected cash flow, not unless you let me know. I'll ask you, what was the intended use of this projected cash flow statement? Maybe you'll tell me it's our routine exercise to do it on a yearly basis. Or you'll tell me, I wish to present it to my banker so that I can access some finances. It's only you who can let me know how you have prepared it. How do you avail such evidence to the auditor? Through a management representation letter. So when we're discussing ISA 580, prospective financial information review, in our 8 audit procedures, number 8 will be seek management representation letter on intended use of the PFI. On the intended use of the PFI, you cannot know not unless this is availed to you as an auditor. So what's the importance? Stroke purpose of management representation letter. What's the importance? Number one, it's a way of gathering evidence. So it avails evidence, or it enables the auditor to gather evidence, which is very important. We said we can never form an opinion without an evidence, or without evidence for that matter. We form opinion based on evidence gathered. So it's a way of gathering evidence. Number two, it reminds the management. It reminds the management of their primary responsibility, to prepare financial statements, Yes, because there is always a clause, there is always a statement, or one of the contents of this letter is that management indicates that they have the primary responsibility to prepare financial statements. So it ceases to be an element of expectations gap, or an element of a misconception of what auditors do. So it reminds them of their primary responsibility to prepare the financial statement. Number three, can be presented in a court of law, presented in a court of law, presented in a court of law when auditors are defending themselves. Yeah, because what did we say when we are discussing 9 ways of minimizing auditors' liability? I don't know whether you can recall the 9 ways of minimizing auditors' liability. Yes, but one of them we say auditors need to avoid being negligent. And then we extended and said by observing quality control measures. We'll be discussing this under ISA 220. ISA 220 discusses quality controls. One of them is ensuring that there is proper documentation. ISA 230, ensuring that there is proper documentation of the work done. So this one shows that apart from performing all the substantive tests that you did, you went an extra mile to require the management to commit themselves in writing about some confirmations. So it indicates that you avoided being negligent by all means. And lastly, number 4, I've just indicated that it confirms on matters of presentation and disclosure. It helps the auditor It helps the auditor in ensuring that the assertion of completeness is satisfied by the clients of issues. It helps the auditor in ensuring that the assertion of completeness is satisfied by the clients of issues. Because remember what I've said, that we always seek management representation letter to confirm on presentation and disclosure. To confirm on assertion of presentation and disclosure. If you check where we discussed assertions, we talked of disclosure stroke completeness. Basically, management is able to confirm that there are no omissions. All that ought to have been recorded have been recorded. All that ought to have been recorded have been recorded. Let's look at contents. So contents are classified into three. We start by discussing the general contents. So are the general contents, we've already indicated that they always indicate that indicating that they have primary responsibility to prepare financial statements which portray a true and fair view. Yeah, that's why we say that this letter reminds the management of their responsibility to prepare financial statements, because as they write, they are pronouncing it. B, indicating that they have availed all the financial statements to the auditor for auditing purposes. Wanajicommit, they commit themselves. Anne is asking whether management representation letter is the same as management rate. Yes, they are not the same. Right after this, we'll be discussing management rate. So some had said yes. No, they are not the same. They are totally different. They are totally different. We are discussing management rate right after this. That's why you've seen here, I've labeled it as a representation letter without the management element. So we have a management letter and we have a representation letter, but we call it management representation letter because it is written by the management. Otherwise, to avoid confusion, this is a representation letter. The other one is a management letter without the element of representation. Next point, an indication by directors. C, an indication by directors that they have applied appropriate accounting policies, that they have applied appropriate accounting policies that they have applied, appropriate accounting policies. Yeah, they committed themselves in writing. They commit themselves in writing because we have the accounting policies and concepts, accounting policies and concepts. Yeah, we have in accrual concepts, prudence, substance over form, money measurements, all those concepts that they have applied are the most appropriate ones. Number D, we discussed this in the previous class. An indication that subsequent events have been properly accounted for. Subsequent events have been properly accounted for. And lastly, you can give this example. E, details of any contingents. Details of any contingents affecting the client. Details of any contingents affecting the client. Details of any contingents affecting the client. And nilikueleza tutasoma contingent, although I told you that it's nowhere in the syllabus, but I always make sure that I discuss it. Those are the general contents, indication of the acceptance of the primary responsibility, that they have given all the records for audit purposes, that proper accounting policies and concepts have been applied, subsequent events or the off the balance sheet events, or even what did we call them again? Post balance sheet events have been properly accounted for, and details of any contingents affecting the client. Details of any contingents affecting the client. What about assets? Number 2, this was general contents. Let's look at assets. So assets, it indicates that the client has got all the titles to the assets and information of any charges. It indicates that depreciations are sufficient. It indicates that provisions for value and doubtful debts are sufficient. It indicates that stock items have been properly accounted for and properly classified as either raw materials, work in progress, or finished goods. Hizo tutaandika hapa. Number 2, assets. A. The confirmation that the company has satisfactory titles. The company has satisfactory titles. Its assets has satisfactory titles to its assets, and where some assets are charged, as security, where some assets are charged as security, where some assets are charged as security, comma, the details of such charges, the details of such charges, the details of such charges, the details of such charges. Any the story of fixed charge, floating charge, we need to ensure we avail that information. B, details of the adequacy, details of the depreciation charge of fixed assets, details of the adequacy of depreciation charge of fixed assets, details of the adequacy of depreciation charge on fixed assets, kwamba depreciation charge is sufficient. Details of the adequacy of depreciation charge on fixed assets. Number C, basis of valuation of stocks. 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 Distinguishing between values of raw materials, distinguishing between values of raw materials, comma, work in progress, and finished goods. Work in progress and finished goods. Basis of valuation of stocks, distinguishing between values of raw materials, work in progress, and finished goods. Perfect. D, details of the adequacy. Of provisions for bad debts. Details of the adequacy of provisions for bad debts. Details of the adequacy of provisions for bad debts. Details of the adequacy of provisions for bad debts. Details of the adequacy of provisions for bad debts. Perfect. Let's look at number 3, liabilities. So liabilities in Article all the non-liabilities have been recorded. We want them to commit themselves in writing that all the liabilities have been recorded. So on the liabilities, say A, an indication that all known liabilities, all known liabilities have been fully provided for. All known liabilities have been fully provided for, as at the balance sheet date. Have been fully provided for as at the balance sheet date. Have been fully provided for as at the balance sheet date. Have been fully provided for as at the balance sheet date. Then B, nature and amounts. Nature and amounts of all contingent liabilities. 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 Those are the contents. Those are the contents of a representation letter. There are times that management may refuse. There are times that management may refuse to draft a representation letter. All right, have a subtopic there. Auditor's action. Auditor's action. Auditor's action where the client's management, where the client's management refuses to provide representation letters. Auditor's action where the client's management refuses to provide representation letters. Umeitisha representation letter, but because of ignorance, they are not availing one. Or maybe we have given you all the books. Now they are not even understanding what it is that you're asking for. They have given all the books, vouchers, records, everything. and you proceed to ask for a representation letter, they may not even understand what you're looking for. So because of those reasons, they may refuse to provide a representation letter. So how does an auditor respond to this? Number one, you write one for yourself, ujiandikie moja. Then you persuade them to sign. Yes. Draft one for yourself, then persuade the management. Persuade the management to sign. Yes, you are writing that which you wanted them to confirm. Then you persuade them to sign. Of course, when they sign, they become privy to the contents. All right, number two, you need to convene a meeting. Convene a meeting together with the management. Yes, management work together with the management, and minute all the deliberations. You know, as you talk, you'll confirm some of these things. By the way, have you given us all the books? Yes, then you minute that. Yes, as you talk, then you're asking them, I saw you have this and that. What is its intended use? They mention, you write it there. So all that which you'd have wished them to confirm, you try to get this during your deliberations. Number three, you can choose to modify the report. Citing limitations on scope. Modify the report, citing limitations on scope. We discussed what limitations on scope is. Yes, comma, there are some evidences which you would have expected, but it's not available. So modify the report, citing limitations on scope. Number four, try other ways of obtaining the missing evidence. As much as we are saying that this knowledge is only vested with the management, you are experts. I saw in CP1, you have a topic by the name incomplete records. You want to do an income statement, but there are no fields. You try out, yes. You find yourself doing a debtors ledger control account. By that, you get the credit sales. Then you analyze the cash expenses. That way, you're able to get the cash sales, and that's where you have the total sales. So what we are saying, some evidences are missing. Management is not availing this evidence to you. Try other avenues. Try other ways of gathering this evidence. Try other ways of obtaining the missing evidence. Then number five, you can always check, was this evidence so relevant, or you can do without it. There's a theorist by the name of Adams Stacey. You have a theorist by the name Adams Stacey. Adams Stacey is in the behavioral school of thought, where we discuss Abraham Maslow, Clayton Alderfer, Douglas McGregor, David McClelland, Frederick Hesburghs, B.F. Skinner. That's where he is. And he also always discusses of how, as employees, we perceive inequity. Why do we perceive inequity? When we compare what we are being paid with what our peers are being paid elsewhere in the same position. If you are being paid so much, they are being paid so much, we are likely to perceive inequity. Then you compare your input and the output. Your input is the work you are doing, the output are the salaries and the remunerations. You find that there is a gap. There is a remuneration gap. Yes. So you may try to ask for a salary rise. If it does not happen, you try looking for greener pastures. If it does not happen, what we usually do? We change the perception. Yes, tunaanza kusema lakini si hata kuna mtu anaona tu kazi tu kama hiyo. Yes. Then tunaanza kusema lakini si hata cleaners they survive with the little they get. I think I'm not so bad. Nilo, you've tried to restore equity and it's not forthcoming. We change the perception. So we may have the first assessment that we require this evidence so much, and it is only vested with the management. But after you miss it, you have to access it, you may reassess afresh and find that whether I can still make conclusion without this. I can still make conclusion without this. Yes, Moses is confirming that this is the theory of motivation. Adams, Stacy, the theory. Yeah, you need to assess whether you really need this evidence. So assess the implication of making conclusion without the evidence. Without the evidence. What's the implication? It may not be a major thing. It may not be a major thing. It may not a major thing. Saa zingine unafika nyumbani unasahau na kitunguu kununua kitunguu. Sasa nishuke tena. Otherwise, even cooking without it will not have an impact. Instead of sleeping hungry. Perfect. Let's answer a question. Not a question, questions. Let me share this paper. I'm seeing a very good question here. I had already shared it, but for this specific, let me reshare. Then you give me the answers. Advanced level. There it is. Check question number 5. Check question number 5. Check question number 5. And this other one, question number 4B. This other one, question number let's read it together. The one I've shared first. Question number 5 reads, assess in each case below whether or not management representation letter would be a substitute for other audit evidence. If not, state what other type of audit evidence you would obtain. So number 1, management plans to alleviate adverse financial conditions that caused the auditor to have initial doubts about the entity's ability to continue as a going concern. Just a going concern. We did it. Yes. Then management plans with respect to disposal of a segment of a business. Number 3, representations are obsolete and damaged inventory. Number 4, management represents that financial records have been available for the review by the auditor. Number 5, representations about the correction of a material related party receivable. 5 questions with 10 marks. 10 marks, even 1 mark at advanced level. Ni mingi. Yes. Sababu tuko watano hapa, kila mtu achukue yake, mimi nitajibu ile mtabakisha. Online family They're saying we check the sound. I don't know. And the gadgets are perfect here. Maybe internet. We have some internet fluctuations. Internet fluctuations. Anyway, check in the group. I've sent in the group. I've sent in our WhatsApp group. So let me take it again to tell you to and write a new match on what they're asking. In those 5 circumstances they're asking. Yes, it even has a, yes, it's a December 2014 question number 5. I had already shared these past papers. So you have them already. It's only that I've shared this so that we don't look for it so much. They're asking, in those circumstances, do we need a representation letter? If yes, well and good. If no, how else can you gather that evidence if not by way of seeking management representation letter? Do you know what is testing? We've already checked when it is written. Remember number 1, 2, 3. Number 3, we have said we only require representation letter when it's a material evidence which is only vested with management. Then we have discussed the contents, general contents, the assets contents, and the liabilities contents. Now you need to check, do you need a representation letter or not? So in family, you can just indicate number 1, yes or no. Number 2, yes or no. Number 3, yes or no. Question number 5A. Question number 5A. So here in class, take advantage to do the first one so that you can handle the one which is not so complicated. Number 4. Yes, we move with such speed. Number 4, we need a representation letter. The answer is yes, because it's a 580 requires. See, that's the case. It's not even a question of asking of whether we need it or not. Under the contents, number 2 have said that we have to write to us indicating we have availed the records for purposes of audit. So number 4 is already answered. It's a yes. For number 4, it is a yes. Na yeye Maureen wa online anasema mambo ni matatu. At number 1, 2, 3 ni yes, yes, yes. Huyo ni Maureen. Hapa tumeshapata moja, imejibika vizuri. Another one friend to try. Number which one? Number 3, I'm told yes. Number 3, I'm told yes. Which other number? Number 5, you are saying? Number 5, you are saying yes. My Daniel Pro, you are on the way to number 1 and number 2. Oh, you don't want the question, eh? Sorry. Good. We can check it together. Let's see what the online family is saying. So Mo is saying number 1, 2, 3, yes, yes, yes. Moses is saying part 3 and 5 does not require. 3 and 5 does not require. That's Moses. And Jenga is saying, which question are we doing? Mo is saying number 5 no. Isaac is saying number 2 yes. Sam is saying number 1 no. Ahmed is saying number 1 to 5 yes. Number 5 no. I like those insights. So, number 1, management plans to alleviate adverse financial conditions that caused the auditor to have initial doubts about the entity's ability to continue as a going concern. Number 1 is a yes. We need a representation letter because hatuwezi jua kama wameamua ni sale of a fixed asset ama ni rescue package. Can you recall those points? Rescue package, ama ni letter of support, stroke comfort letter, or shareholders to bring in more cash. We need a representation letter. You can say this, after saying yes and explaining that, unaweza ukasema hivi. But if they have already convened a meeting to discuss on how to alleviate the going concern problem, we don't need, because we can already check through the minutes. You get this right, eh? Yeah, because you've not told us whether, you know, what is in your mind cannot be known until you put it in writing. So the general answer there is, yes, we need a representation letter. We need a representation letter. But in the event there was a meeting, deliberating on the same, we may not need it. Sababu tutaangalia through the minutes. After part 2, the reasoning is the same. You just say yes. Because what are they saying? Management's plan with respect of disposal of a segment of a business. For instance, now you don't know what I'm planning to sell unless I do a representation letter. But if we've already convened and discussed, now, so we sell this asset because it's an able asset, so that we can raise money to pay salaries. It's already on 6th, and maybe we are ready to pay our suppliers and such. So the answer is yes. But again, you need to indicate that. If a meeting has already been convened, directors' meetings have already been convened to discuss on the disposal of what? Disposal of this segment, we do not need. So number 1 and 2, yes, yes. But in event, in both cases, a meeting has been convened, we do not need, because we go for representation letter when what we want to confirm is only vested in management. We do not have a way out. Number 3, representations about obsolete and damaged inventory. The answer there is no. We don't need. Let me see who had answered no. Let me see whether we had somebody who had answered no. Part 3 and 5 don't require management. Yes, Moses was very correct that part 3 and 5 does not require management letter. So at least we had Moses there. But for sick manager, disposal, yeah, that was correct, Mr. Mo. Why don't we need? So if damaged inventory, you can ask the management, where is it? You can go verify physically. If they are telling you that 3 armrest chairs are not suitable to be used in cars, you ask them where are they? You can go confirm. So obsolete and damaged inventory, you don't need. You confirm yourself. Physical examination. Physical examination. Then number 4, our learned friend here was very correct. There's no question of asking why. It's part of what should be captured. So the answer on Roman number 4 item is a big yes. A big yes. Reason, it is a requirement of ISA 580. Reason, it is a requirement of ISA 580 that management has to confirm this. What about representations about the correction of a material related to part of receivable? Moses again got that right. We don't need. We don't need. Number 5 is a no. Matters data. You can check. You can check the data's ledger control account. You can check the data's individual ledger account. You can even check the correspondences between the client and the data. You can even circularize them. The least you can do. You can circularize. Circularize the data. Call them. Send them circulars to confirm about their existence and the valuation of the debt. About their existence and the valuation of the debt. And the valuation of the debt. Others, thank you so much for the input. Thank you so very much for the input. Then there is another question that I've sent, or it's a big question, but there's a part we can answer. There's a part we can answer. Hey, your question number 4. Risk. And I promise to assist you to answer questions on risks. You see, it's a huge question on risks. And what are they saying? We're not answering it now, but I can just read for you. Citing relevant IFRSs, it's not an option. Citing relevant IFRSs and auditing standards. That one you must cite. All these ISAs that I've been mentioning, including IFRSs. Analyze the principal audit risks to be considered when planning the final audit of Ikuru Limited for the year ended that 1st December 2014. So it's not an option. Lazima tushike hizo ISAs mzuri, lazima tushike hizo IFRS vizuri na hizo IAS vizuri, tuzishike vizuri. We even mentioned, oh, you're not seeing it. Let me see, the date it was delivered. May I send it? It's question number 5. Let me resend. Or mark it something. Let me mark it. There it is. You've seen it? Now question number 5. Question number 5. Even some Moses have reshared it. Yes, so I was reading, I should be reading question number 4. I'm saying question number 5. Jesus Christ. Yes. Nikuzoea numbers kubwa kubwa. Yes, sorry for that. It's question number 4A. Sorry for that. Sorry for that. It's question number 4A. I was just reading the required to emphasize on you internalizing the standards. Because it's reading, that's question number 4A, citing relevant IFRS and auditing standards, analyze the principal audit risks to be considered when planning the final audit of Ikuru Limited for the year ended that 1st December 2014. Into brackets, you may assume that the amounts indicated are material in the context of the financial statements, 12 marks. This is the only question at advanced level. Ukipata 12 marks, ujue unahitajika 6 points. All the other questions, ukipata 15 marks, they want 15 points. I'll show you a question like that. If they give you 10 marks, they require 10 points. But questions on risks, divide by 2. But again, when you're marking, we are told it should be 6 well-explained points. So not only 6 points, but 6 well-explained points. So this one requires 6 points. Make sure I answer that question. Make sure I answer that question. The question of interest is part B, Roman 1. In the context of ISA 580 management representations, explain the action the auditors should take with respect to failure by management to provide management representations on the warranty provisions. You see the 4 points? Yes, the 4 points. The 4 points to Meandika, those are the answers. Those are the answers. Wasipoandika, andika. Me, sometimes I even wish myself a good night. You don't have to wait for them to write. You write for yourself. You write for yourself. Na inakuwa imefanya. Nataka ndio kumbuka hiyo point ya kwanza. Write it for yourself. Si ndivyo tumesema ya kwanza? Write it for yourself. Draft one for yourself. And persuade the management to sign. Sign. So that's it for management representation letter. Let's look at ISA 260. Yes, I had timed the first 1 hour. We do that later, then the second hour, we do that other rate. Karibu, Mr. Wale. So that's the first question on risk I'll handle. I don't know when we plan. We plan that we need to handle such big question. And you realize, like I told you, big questions are very simple. The small ones. So ISA number 260, it discusses communication with the persons charged with governance. Communication with the persons charged with governance of an entity. Basically, we are discussing management rata. Management rata. That's what you're discussing. Management rate. Communication with the persons charged with governance of an entity. That is a 260 discusses management rate. So this is the last rate we are discussing. Remember, ISA 210 we discussed engagement rate. ISA 570 we discussed comfort rate. And earlier this session ISA 580 we did representation rate. And now we are discussing management rate. Those are 4 rates which are very important. Of course, these ones we know. This one we know it's drafted by the officer to be management. Na iko na majina mingi sana. It's either management rate, we even call it rate of internal. Rate of internal weaknesses. We even call it post-audit rate. Post-audit rate. We even call it letter of comments. Letter of comments. We even call it recommendation. Recommendation letter. We even call it our post-audit letter is there. We even call it a letter to those charged with governance. Letter to those charged with governance. Yeah, all those, hizo ni majina zake. Hizo ni majina zake. I don't know whether I have the notes here with me. Yeah. It's here. We even call it ICS rate. ICS rate. All this. So the one which makes us to recall what it is properly is the rate of internal weaknesses. At least that one relates to its contents. It relates to its contents. It relates to its contents. We can define it, let's define it and say, it is the rate from the auditor. It is the rate. It is the rate from the auditor of an entity. Letter from the auditor of an entity. Letter from the auditor of an entity to those charged with governance. To those charged with governance. To those charged with governance. E.g., directors and management. E.g., directors and management. E.g., directors and management. Directors and management. In form of an advice. In form of an advice. In form of an advice relating to the accounting, and the internal control systems, relating to the accounting and the internal control systems, relating to the accounting and the internal control systems, relating to the accounting and the internal control systems. Yeah, so what do you do when you are auditing? You come across some weaknesses. Weaknesses in the accounting systems, weaknesses in the internal control systems. So you capture them where? We always capture them in auditor's diary. We call it auditor's diary. Auditor's diary tulisoma kwa ISA number 230. ISA number 230. Audit documentation. Yeah, where we say when you're talking of working papers, we have the permanent audit file, the current audit file, the standardized working papers, and the automated working papers. After that, we always discuss auditor's diary, or sometimes referred to as auditor's notebook. And part of the contents that we put here are the errors and flaws that we come across, weaknesses in ICS. So that at the tail of audit exercise, now we are able to do a management letter highlighting all those weaknesses, highlighting all those weaknesses. Another paragraph. Auditors may consider that. Auditors may consider that. Auditors may consider that they report certain matters. Auditors may consider that they report certain matters which came to their attention. Auditors may consider that they report certain matters which came to their attention during the audit, which came to their attention during the audit, which came to their attention during the audit to the directors and management. To the directors and management, report certain matters which came to their attention during the audit to the directors and management. Another paragraph says, the objective of this letter, the objective of this letter, the objective of this letter is to assist the managers. The objective of this letter is to assist the managers and directors, is to assist the managers and directors on proper use of resources, on proper use of resources, on proper use of resources, comma, design and implementation of ICS. Design and implementation of ICS. Design and implementation of ICS. That's internal control system. Design and implementation of ICS. Subtopic, purposes of a management letter. 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 So, of course, it will capture the weaknesses. It will indicate why did we modify the report? What issues that made us to modify our report? It will even capture the areas where we can improve on the 3 E's. Economy, efficiency, effectiveness. Where can we improve on the 3 E's? Even will indicate what's likely to affect future audits. What's likely to affect future audits so that these areas can be improved. And then when we talk of contents, we'll talk of weaknesses, deficiencies, limitations, shortcomings, departure from the norm, departure from the standards, inconsistencies, all those problems. Then we always capture the risks that these weaknesses pose to the business, and then we give our recommendations. We look at the question which will require us to capture all this. We see how to approach it. We'll see how to approach it. So number one, we are discussing the purposes. Number one, to enable the auditor. To enable the auditor, give his comments. To enable the auditor, give his comments on the accounting records. Enable the auditor, give his comments on the accounting records and the systems of controls. Enable the auditor, give his comments on the accounting records and the systems of controls. His comments on the accounting records and the systems of controls. Number two, to enable the auditor, to bring to the attention of management, to enable the auditor to bring to the attention of the management, to enable the auditor to bring to the attention of the management areas of weaknesses, bring to the attention of management areas of weaknesses that might lead to material errors, 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 that might lead to material errors. Number 3, to enable the auditor, to communicate matters, to enable the auditor to communicate matters that may have an impact, to communicate matters that may have an impact on the future audits, that may have an impact on the future audits. Enable the auditor to communicate matters that may have an impact on the future audits. Number 4, to enable the management to put right, to enable the management to put right, kuweka sawasawa, enable the management to put right matters that may have led to, enable the management to put right matters that may have led to audit report qualification, enable the management to put right matters that may have led to audit report qualification, put right matters that may have led to audit report qualification, matters that may have led to audit report qualification. Number 5, to point out areas, where management would be more efficient, to point out areas where management would be more efficient, point out areas where management would be more efficient, comma, effective, where they could take advantage, or where they could take advantage of economies of scale, or where they could take advantage of economies of scale, or where they could take advantage of economies of scale, where they could take advantage of economies of scale. You can do an IE 3Es. IE 3Es, although we discussed this during public sector audit discussion. Contents of a management letter. 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 Number 1, a list of weaknesses. A list of weaknesses in the structure of accounting. A list of weaknesses in the structure of accounting and ICS. In the structure of accounting and ICS. A list of weaknesses in the structure of accounting and ICS. Number 2, a list of deficiencies. A list of deficiencies. A list of deficiencies in operations. A list of deficiencies in operations, comma, controls and records. A list of deficiencies in operations, controls and records. A list of deficiencies in operations, controls and records. Number 3, unsuitable. Unsuitable. Unsuitable, accounting policies and practices. Unsuitable accounting policies and practices. Unsuitable accounting policies and practices. Unsuitable accounting policies and practices. Next, non-compliance with accounting standards. Non-compliance with accounting standards and registrations. Non-compliance with accounting standards and registrations. Non-compliance with accounting standards and registrations. Next, explanations of the risks. We've talked of the risks. Explanations of the risks arising from each witness. 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 Next. Comments on inefficiencies. Comments on inefficiencies. Comments on inefficiencies. Comments on inefficiencies. Then lastly but not least, recommendations for improvement. Recommendations for improvement. Recommendations for improvement. Recommendations for improvement. So I want to share with you. So hiyo swali ya management rate, it has been tested 4 times. 3 times we were required to draft a complete management rate. Then one of the times we were only asked about the purposes and we were given 5 marks. So 3 instances doing a complete management rate. And it was worth, in all circumstances, it's worth 14 marks. All right, I've shared it. I've shared it there. I have shared it. Good, good. So let's read it together. You are the audit senior for Kenya Computer Services Limited, a distributor of microcomputers, and have just completed the interim audit. This is interim audit have just completed the interim audit. When you and your staff were auditing the accounting records, systems, and controls, you recorded in your files the following information. Number one, the credit limits for 4 customers of Kenya Computer Sales Limited had been substantially exceeded, and the new customers in the last 12 months have not been allocated credit limits. Number two, when testing a sample of 15 purchase invoices, you noted that one purchase invoice had been posted twice to the purchases ledger by mistake, and 2 other purchase invoices could not be traced. Number three, the results of a stock check conducted at the half year revealed that some microcomputers supposed to be in stock were missing, and that other microcomputers which had been returned by customers were in stock but had not been recorded as having been returned. A few of the missing microcomputers have been traced to the directors and staff who have borrowed them for personal use at home. Leasing agreements for microcomputers offered by Kenya Computer Sales Limited to its customers have been queried by KRA, who are not satisfied that the terms of the agreements, which give the customer the right to purchase the equipment at a future date, qualify them as leases as opposed to hire purchase agreements. These agreements have been in use for a number of years and were vetted by your firm. Required: A, draft a management letter addressed to the board of directors, commenting on the weaknesses you discovered, the risks arising from those weaknesses, and your recommendations for improvement. 14 months. Comment on any significant impact these matters may have on your year-end audit work. 6 months. So in interim report, interim management letter, so hii huwa tunaanza na address zetu. Saa zingine hauweki address yako kama ni in practice because you kuna letterhead sasa yako. Letterhead takes care of that. But for purposes of learning, we are doing an interim management letter. Interim management letter. So you have your addresses here. Yes, I know in the format of the letterhead, sometimes this our left and your left are up here sometimes. Utakuta ikiwa hapa right after the letterhead, our left and your left, then addressee. Basically, they come before the addressee. They come before the addressee. Then the interlink, the reference. We can choose to do with a heading known as introduction. But when we do introduction, you should not forget to do conclusion. Or we just get into writing. And what do we start with? Ours kazi yetu as auditors. Remember when we were discussing incidental objective. It's not our responsibility to prevent, detect, and correct errors and frauds. We need to remind the management that it's not our responsibility. We cannot be left to assist you because you're writing to the management. We cannot be left to assist you to preventing, detecting, and correcting errors and frauds. But during our audit exercise, we've come across the following issues which we feel we need to bring to your attention for action. That's how we started. We remind them it's not our duty. It's desirable that we highlight the weaknesses so that they respond to them. Otherwise, it's the management's primary responsibility to prevent, detect, and correct errors and frauds. It's their primary responsibility to design very strong internal control systems which can arrest those issues, So we choose to do an introduction. Let's do introduction. So we should not forget to do conclusion. So what I'm saying is we can do the introduction without indicating its introduction. But when you indicate, again, what does it mean? When we have our addresses and addressee on the left, it means our paragraphs will be separated by skipping a line. But if we had our addresses far right and addressee far left, how do we separate paragraphs? By leaving an indent. Yes, yeah, where you start a paragraph and it throw inside from the margin. So if these addresses were here, na hii nitaongezea fees, hii ni mambo ya okay, on a right note. So when these addresses are the far right and the addressee far right on this left, you don't skip a line to separate a paragraph. You separate a paragraph by leaving an indent when you're starting a new paragraph. But we call this one block letter writing. Yeah. So when you do block, then it means you separate paragraph by skipping a line. Nilisoma hiyo cha lazima. There's a college which gave me an English class for secretarial class with my pronunciation issues and everything. They made me do secretarial by force. So when I taught for one semester, then I thought, I'm teaching and I'm not doing this. So I booked secretarial course. So I'm a secretary by profession. Even when it was bringing the exam timetables, they labeled me as female because all the English. So I sat for that. I've done typing. I've done all these other funny things. Ndio kikaumana siku moja, I'll be able to naweza kaa reception mahali to make ends meet. Yes, by indenting. Moses saying if the addressee are far right, far left, our address far right, we separate by indenting. It is known as indenting. Perfect. Let's write this right. Let's introduce and say, in accordance with our normal practice, we wish to bring to your attention, certain matters we wish to bring to your attention certain matters that have come to our attention. We wish to bring to your attention certain matters that have come to our attention. We wish to bring to your attention certain matters that have come to our attention during our interim audit visit. During our interim audit visit, you just skip 2 lines. Just skip 2 lines. Yes, yeah. We don't just skip 2 lines. Have come to our attention during our interim audit visit. Full stop. These do not represent an exhaustive list. These do not represent an exhaustive list of all weaknesses. Do not represent an exhaustive list of all weaknesses that may exist in the systems. Do not represent an exhaustive list of all weaknesses that may exist in the systems of accounting and internal controls. I take it again. These do not represent an exhaustive list of all weaknesses that may exist in the systems of accounting and internal controls. In the systems of accounting and internal controls, we are telling them there could be other issues, but as far as we are concerned, those 4 issues that we've read in the question are the ones that we have come across. Another paragraph, meaning you skip a line. Skip a line to move to another paragraph, and then start right from the margin without indenting. Say, our report is a draft report. Our report is a draft report. Our report is a draft report, and we hope that you will review it. And we hope that you will review it. And we hope that you will review it and append your management comments. And append your management comments. And append your management comments to enable us to finalize our report. Append your management comments to enable us to finalize our report. To enable us to finalize our report. You're saying our report is a draft report, and we hope that you will review it and append, like appending your signature, and append your management comments to enable us to finalize our report. That's why I say, as auditors, we are not witch hunters. We are carrying out this exercise with the utmost good faith. In Latin, you call it Euberima Fidei. Yes, we are carrying out with Euberima Fidei. So if it comes some weaknesses, some issues, we do a management letter for internal consumption, for management, so that they may correct. You've done correction of errors. That if you identify an error, if you correct it, then that error ceases to be. So we need to report to them what we have detected then. They comment on it and they correct that which can be corrected before we do our final report. Yes, now this one to enable us. Yes, to enable us. I'll share the report. It's like we have issues with the sound. The sound. All right, another paragraph. Skip around to have another paragraph. Skip around to have another paragraph. The issues that we came across, 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 comma, their implications and recommendations for improvement, the issues that we came across, their implications, and our recommendations for improvement includes the issues that we came across, their implications, and our recommendations for improvement includes. Now, this question, we always copy-paste that issue that is in the exam, and we assume it's us who have detected it. We own this problem, that we were able to detect that, then we copy-paste it. So number one, we had issues with credit limits. So skip around and have number one, credit limits. You just come up with a heading which fits the issue, credit limits. So after reading it through, you come up with something. So I want us to copy-paste that problem in the first paragraph here. Let's copy-paste it, but we are owning it. We are indicating that it's us. We noted that, start right from the margin. We noted that the credit limits for 4 customers, we noted that the credit limits for 4 customers, we noted that the credit limits for 4 customers have been substantially exceeded. We noted that the credit limits for 4 customers have been substantially exceeded. And that new customers in the last 12 months, had not been allocated credit limits. New customers in the last 12 months had not been allocated credit limits. New customers in the last 12 months have not been allocated credit limits. That's where we always start. So you cannot lack something to write. You indicated you have noticed this. What's the risk associated with this? Let me assist you in this. That in an entity where we are doing some credit sales, when we set limit, we exceed. Like this household fund, you can recall the limits that we are given. If you checked, they gave us some limits. You can't borrow beyond this limit. After borrowing and repaying, that's when they adjusted upwards. If we set a limit that we cannot sell to you in excess of that 1,000 shillings on credit, then we exceed it and do even some 700,000 shillings. We have exceeded with all that margin. Are you seeing some risk? Are you also seeing some risk if we just sell without setting limits? You know, setting limits, what it involves? It involves screening the customer before we sell on credit. You know, their ability to pay. So when we exceed their ability to pay, or we sell to them on credit without assessing their ability to pay, there is a risk that bad debts will be on the rise. And when it is on the rise, and ensure total adherence to the set limits. And in the event that they need to be reviewed upwards, then it has to be done by a responsible senior official. Not everybody should be reviewing this. It should be reviewed by a senior responsible official, So skip around to have the next paragraph. We've already highlighted the weakness. Now we want to give the risk of this. So I can say, enforcing credit limits reduces the incidence of bad debts. Enforcing the credit limits reduces the incidence of bad debts. Full stop. When credit limits are exceeded, when credit limits are exceeded or not established, when credit limits are exceeded or not established, the company's liquidity position, the company's liquidity position, the company's liquidity position is adversely affected. The company's liquidity position is adversely affected. The company's liquidity position is adversely affected. You see? Now skip a line to give you a recommendation as a professional accountant. Skip a line, then start right from the margin. Don't leave an indent. Say, we recommend that credit limits be carefully established. We recommend that credit limits be carefully established. We recommend that credit limits be carefully established. Credit limits be carefully established. And then once established, they should be enforced. And then once established, they should be enforced. Once established, they should be enforced. Full stop. When necessary, that the limits be revised, when necessary, that the limits be revised, when necessary, that the limits be revised, comma, then proper formalities should be followed. Then proper formalities should be followed. Proper formalities should be followed. And the extension be approved. And the extension be approved by senior management. Extension be approved by senior management. Extension be approved by senior management, and extension be approved by senior management. So Mwanzisho, this was 1 mark to introduce it. The way we've answered it, those are 3 marks. Capturing the issue, the risk, and the recommendation, those are 3 marks. So in case 3, 3, 3, 3, those are 12. Introduction, 1 mark. Conclusion, 1 mark. 14 marks. 14 marks. So skip around to have management comments. Management comments. Management comments. Management comments. Then leave some space for management comments. You leave like how many lines? And leave like 3 lines. 3 lines. So that we move to item number 2. We move to item number 2. Leave some space for them to comment. Sometimes they may explain and you find that it's some documents which they had not availed. Kumbe, even these ones we are saying they have not been vetted, they were vetted, but that documentation was not availed. So it ceases to be a weakness. It ceases to be a weakness. Number 2, we had issues with purchase invoices. Some have been recorded more than once. Others have been recorded but cannot be traced. So heading, purchase invoices. Purchase invoices. We'll not write that one. Let's discuss. So we just copy paste the way it is. We noticed that here, then you copy paste. What do you think are the risks associated? Tell me. That some invoices have been recorded more than once. Then you as an auditor, you have seen some invoices recorded, but you can't trace them. The risk is we may have element of double payments, or even paying an invoice for more than once. Because if you have seen some have been recorded more than once, we will pay an invoice for more than once. Plus, if there are some figures but the invoices cannot be traced, we could be paying some fictitious suppliers. non-existent suppliers. That's the risk. What do you advise them to do? Payments should never be done until proper validation is done. You know what is validation? Eh? You check. These are purchases invoices. So you need to check when you're purchasing, where do we start? You need to compare the requisitions with RPOs, with good received notes, with invoices before you pay. You have to reconcile this to make sure that that which was supplied is what you had ordered for. And that you need to ensure that there is proper validation. That's what we call validation. That's what we call validation. You are validating RPOs with good received notes, with invoices. They must agree. Si hata wewe unajua saa ile kampuni iko na mjengo. Sana sana unakuta accountant pia kuna mjengo, nani mwingine anaweza kuwa na mjengo at the same time. Until you wonder what a coincidence. Who was the chairman ako na mjengo. The procurement guy is also constructing. Hey, coincidence. From nowhere. Yes. So kuna uwezekano if the company is paying for those building materials and even the fundis, they are listing an invoice even for it happens. Things happen. Things happen. So you do properly. That's what you advise them. Which is this other problem? I'll give you that later. But I know you are my learned friends. You can always be able to do this. We had issues of missing stock items. Missing stock items was a big issue. Returns are coming, but they're not being recorded. What's likely to happen? If we have some returns inwards which are not recorded, what's happening to our profits? Net profit, is it overstated or understated? When returns inwards are not recorded, our net profit does what? Is overstated. Because failure to record returns inwards overstate sales. Overstating sales, overstating profits. So we have misstated profits. Our stocks are likely to be materially misstated. That's how you avoid lots of stories. Because see this, we have some returns, they're not recorded. Some computers are in the homes of the directors and the staff. So you need not check whether is it an overstatement or understatement. You can just say all these issues may lead to stocks being materially misstated. Misstatement takes care of understatement and overstatement. So you avoid lots of issues. Yes, so you have captured this weakness. You've indicated that this will lead to material misstatements of stock items. What recommendation do you give? You need to have proper recording of stock movement to avoid misuse. Because eventually these computers which are in the homes of directors and staff, actually they can be sold and they pocket this money. Double tragedy. You lose the computer, you even lose the revenue as an entity. So we need to have proper recording of movement of stock. The other one, the last one, kuna issues na this agreement. I need to read it. I can't recall what it was about. But there are some sales we are doing. There are sales we are doing leases. We are doing leases, but KRA sees them as hire purchase. Now, check this very statement. These agreements have been used for a number of years and were vetted by your firm. It's you who told the client to treat them as leases. KRA is disputing this. KRA is seeing them as hire purchase. Maybe there's an element of tax. Me mambo ya tax sijua. That's the problem with specialization. I can't assist anyone on tax matters. Yes. Yenye tunajua ni ile pay inakatagwa juu inaniumaga sana. Yes. Pay is now the housing levy and full stop, nothing else. Sasa hapa, as an auditor, utawahi kubali ulifanya makosa ya kuoffer expertise advice? Ni ngumu sana uadmit. Ni ngumu sana. Ati when you ambia your client, I'm sorry, I misread you. You look for a way. Yeah? You look for, I'm not sure about the tax implication. That if they're recorded as leases and not hire purchase, I'm not sure about the tax implication. Maybe there is. Yes, inatokana mahali unajua hauko sure unakubali. I'm not sure. But I suspect This client recording them as leases and not hire purchase, maybe there is a element of tax avoidance, if not evasion. Kuna mtu akona information that if they recorded them as leases and not hire purchase, kuna ka tax wana avoid. Chana tuachane na hiyo. Hiyo ende ufanye research. I'll also try to check. But now, copy-paste it. Copy-paste it is a weakness. Sindio? Then, what the risk? The risk is, KRA may come to carry out audit. I don't want to enter into matters of tax. Otherwise, they should be captured there under the risk. But since we are not sure, usitishe kasne, usitishe. So, KRA may come up to carry out tax audit. What recommendations do you give them? This is just an interim audit. Before the final audit, let's settle this down with the accounts people. But you insist, you can even assure the client, you continue treating them the way I advised you. I'll handle the issue with the KRA. I'll face the KRA. I'm your auditor, leave it to me. So you're assuring your client, because it's you who advised them to do it. So to let them continue treating it the way I advised, I'm taking up the issue with the KRA. And by the end of the year, we'll have settled the issue. We will have settled the issue. Those are the recommendations you're giving. Those are the recommendations you're giving. Then you conclude by saying that if we have any issue, if we wish some more clarifications of the issues that you've highlighted, they should not be hesitant. Because they may come across an issue they feel it's like you have overlooked something. If they need some clarifications, they should not be hesitant. Then you sign out. Yours faithfully, you sign Clement Kinuthia into brackets. Unaandika CPK. Hii masomo tumesoma na bidii mingi. Yes, into brackets CPK. Yes, into brackets CPK. Yes, unaweka CPK kwa jina yako ama kwa jina ya auditing firm. So you can do yours faithfully, signature Clement Kinuthia into brackets or into partner. For CK and associates into brackets CPKs. You can choose where to do the CPK under your name or under the name of the auditing firm. But when one has just completed the CPA, unataka unaandika kwa jina yako, pleased to be is celebrating the achievements. So I want to give you that later, so that you do not strain so much doing it. Yeah, it's here. When the online family had already requested it because they are not able to follow up so well. So just take your time to write it in your books. And there it is. There it is. All right. I always like confirming what we'll be covering next week on Wednesday, because hata we ukienda unakaa ukijua. So we are likely to be discussing what? Advanced taxation. This is advanced audit. Advanced audit topic number 5. We've done drafting of management. Right. Perfect. Allow me to skip using the work of an expert. Allow me to skip that, but we'll discuss it later. We just need to note that we skipped. I don't know why but I'll discuss internal audit. You see, internal auditors are therein. I'll discuss internal auditor and audit committee. They like those questions so very much, but the aspect of experts, there's not even a single question in our past papers. I'm not saying they cannot test, but let's first discuss internal audit. It's a 16, and audit committee. There's a time they tested on audit committee 20 marks. They asked us, there's a new company starting. They are considering having an audit committee. Come up with a write-up to the directors on the subject audit committee. 20 marks. So you are starting like this. Your address, our left, your left, then the address, ladies and gentlemen, lead audit committee. You start by defining what's an audit committee, the composition of audit committee, the purpose of audit committee, advantages, disadvantages, then conclusion. 20 marks. I'll share that question on Wednesday. As we handle it. So we will be discussing ISA 610 and audit committee on Wednesday, God willing. On Wednesday, God willing. Any question, any suggestion? All right, let's say the grace. Now may the grace of our Lord Jesus Christ and the love of God and the fellowship of the Holy Spirit be with us now and forevermore. Amen. Blessed evening. I'm confusing days. I'm saying on Wednesday. It's like 3 days on a weekend. I've spent the whole day in my office. So, mind kaniambia, it's this is my first class today.